Crude oil prices are climbing higher this morning as we see Ukraine damage Russian oil refineries in a second day of heavy drone attacks. This coming amid reports of falling U.S. crude stockpiles. Meanwhile, OPEC maintaining its 2024 oil demand forecast, expecting it to grow by 2.2 million barrels a day this year. How are all of these factors going to come together to impact oil prices moving forward? Joining us to discuss in studio, we've got Scott Bauer, Prosper Trading Academy CEO. Scott, thank you so much for being here in studio with us.
Great being here.
We appreciate it. There's no shortage of news that I could have started this interview with this morning, but I'm just going to go with Ukraine because I'm curious whether that is indicative of a trend to come. If we keep seeing these moves from Ukraine to hit these Russian oil refineries, what is the impact that has on the price of oil?
Yeah, and I really believe that over the last probably year or so, we've had at least a $5 premium in the price of crude just due to geopolitical risk, most of it coming from Russia, Ukraine, and then obviously Middle East as well. But this has, heightened things a little bit. And then you got some rhetoric from Putin today talking about the nuclear arsenal sort of thing. So I think you have that tailwind for crude, which can happen at any time. I mean, we can see an escalation at any time. And we've seen this consolidation in crude over the last, 3 months, 4 months or so. We've seen 75, maybe 73 on the low side. We're pushing up on that upper end again right now. And I really think this could be the opportunity that crude is going to break through that $80 number, which is really just a psychological number, but it's a big one because that has been the upper band here. So the geopolitical risk, that is absolutely a major, major tailwind for the price of crude.
If we do see a break above that $80 a barrel level there, what does that then mean to the upside that we could see further in price?
I think you're going to see a lot of shorts capitulating and giving in and driving the price up pretty quickly. So I would target 84-ish area without any further escalation in the geopolitical realm. Again, you've got the $5 in my estimation, but you've also, you have to look at what's going on with the economy here, what's going on with the US dollar. And quite frankly, recently, the dollar has come off those highs. It's been weakening. We saw it strengthen a little bit yesterday, but overall, that trend is to the downside as well, which that gives another tailwind to the price of crude.
And when we think about what's going on here stateside, obviously we've got that big election coming up.
Really?
Rearing in the background just a little bit there. How big of an impact does that have on the price of oil this year?
I mean, it's definitely going to be a bone of contention on both sides. There will be some political fodder on both sides. I would like to think that that's not really going to play into the price of crude. And I think that, supply and demand, that really is going to set the prices. And the one thing we haven't touched on yet is China. Yeah. For the longest time, right, we've seen demand destruction really coming out of China because their economy is just not recovering. If that starts to turn around at all, which I think it may, and I've been very bearish on China for a long time, and I see it maybe turning around a little bit, that also is going to be a tailwind for crude here. So over the next 6 months leading into the election, we have so many hot points that can really change the price of crude in a heartbeat. I would watch that break of 80 up to 84 or so, and I think that we see a bottom, a near-term bottom for a while here, probably right around 75 or so, which a lot of people aren't going to be happy with that.
Yeah, and Scott, drilling down into one of those factors that you just had, specifically China, the recovery there, it's hard to gauge when we're talking about timelines here, but I guess, is that something that you see playing out within the next couple of months, or how quickly could we see that really impact prices?
I think we could see that over the summer, and certainly leading up into the election. That could be a hot point as well, that if their economy does start to recover and geopolitics don't calm down, we could be headed for higher prices going into the election, which, one side's not going to like that.
What's the catalyst that you're thinking of that's going to lead to that growth in China?
I just think that they have been stagnant for so long that they
have to go up.
Yeah, you've got the international community, international buyers really just almost at a point now saying, where else can it go? Yeah. So I'm looking at that, and I've seen that stagnation. And just like we were talking about oil, when oil consolidates or any commodity consolidates for a long time, there's usually a big move, a big volatile move coming out one way or the other. I see that potentially happening in China to the upside.
Scott, switching gears here real quick. Got to get your thoughts on the movement that we've seen to the upside in gold. We had gold at record highs. We've seen it give back just a bit today. What do you think that tells us about how it sets us up for the pricing action here heading into that first rate cut?
Well, I think that tells us that the community, if you will, the sentiment is we need some safe haven assets. And I'm not going to compare it to Bitcoin because I think that's a whole separate conversation here. I do think that with the dollar again, where it is right now, there's a lot of money pouring into gold. 2150, which is not so far below where we are right now, just off of the highs. I think that's a real good point where you're going to see a lot of money starting to come back in. And I think we're going to break those all-time highs that we just saw sooner rather than later.
All right, Scott Bauer, great to have you. Great to have you on set here
Thank
today,
you.
CEO of Prosper Trading Academy. Thanks, Scott.